Hello dear students, welcome to second lecture of controlling. The first lecture we discussed what you mean by the controlling, the steps of the controlling, objectives, importance of the controlling. In the second lecture we are going to discuss the techniques, what are the important controlling techniques used in the management. Load the techniques like the budgetary control, cost accounting, break-even analysis, PERT, critical path, information control, and the quality control techniques. All of the important techniques are relating with your the controlling. Okay, and we're discussing the detailed analysis of the entire techniques used in your the controlling. Okay, and so once again, what do you mean by the term is controlling? Controlling, it's like a process comparing your the actual performance with the standard of the organization and find out the deviation and take the corrective action. The process is known as the controlling. There is establishing the standard performance and measuring the actual performance and comparing with the actual with the standard and find out the deviation and take the corrective action. And this is the important elements of the controlling. And there is a question. In a management point of view, what are the techniques used by the management for controlling? What are the important modern techniques are related with the controlling? Here we're discussing the one by one, what are the major techniques used near the controlling. Okay, listen, these are the 12 important controlling techniques are used near the management. The first one is a budgetary control, and there is a cost control, and third cost accounting, break-even analysis, standard costing, comparative financial statement, financial ratio analysis, management audit, program evaluation review technique, it's also known as a PERT, and CPM is a critical path method, information control, and quality control techniques. These are the important techniques are used for the controlling. So it's very important element. There is a traditional controlling techniques and a modern controlling techniques. A traditional controlling techniques point of view, there's a budgetary control, break-even, and the special reports and performance observation, all the traditional techniques. And modern techniques relate to the management audit, responsibility auditing, management information system, the PERT, CPM, all of the modern techniques. That's a classification of the controlling technique. There is a traditional techniques and the modern techniques. Okay, and we're discussing some important category of the controlling techniques. And the first one, there's a budgetary control. The first important techniques used in the controlling is the budgetary control. What's the budget? The budget means statement regarding the income and expenditure. And here the budgetary control is a process by which budgets are prepared for the future period and comparing with the actual performance and find out the variance. Now, organization point of view, they're preparing the budget for the every year. Every year they're preparing the budget. That means it's a statement regarding the income and expenditure. So there is a standard. There is a fixing the standard and also measuring the actual expense. There's a fixing standard expense. Suppose 1 year point of the organization, the management is fixing. This is maybe expecting. This is your standard expenditure. And also, and after the period, they are comparing the actual performance with the standard and find out the variance if there is a deficiency or the surplus. So the comparison of the budgeted figure with the actual figure will help the management to find out the variance and take the corrective action without any delay. As a government point of view, every governments are preparing the budgetary control statement. That means the comparing the budgeted figures with the actual figures. It will help the management to find out the variance and take the corrective action without a delay. The concept is known as the budgetary control. That means like a expenditure and income. How the expenditure is related, it is excess or the deficit, or it can be properly managed. A surplus or deficit can be easily identified with the help of the budgetary control. And what are the objectives of this budgetary control? An organization has a definite objectives for the budgetary control. First important objective is defining the objectives of the enterprises. The first important objectives of the budgetary control is to define the objectives of the enterprises. What are the objectives of the enterprise? Why they are planning for the budgetary control? First, you define the objectives of the enterprise. That's the first important objective of the budgetary control. It must be defined. Is reducing cost or maximizing profit. It's defining the objectives of the enterprise. And second, provide the plans for achieving the object so defined. There is a objectives and must be provide the plan for achieving this objective. You must be provide the certain plans for achieving the objective. The second one is providing the plan for achieving your objectives. And third one is coordinating the activities of the department. And third important element is the coordinating the activities in the various departments. A lot of the departments are related to organized marketing, finance, and the budgetary control always try to coordinate all the activities in the various departments. Okay, and these are the important objectives of the budgetary control. The first one, that is defining the objectives of the enterprises and provide the plan for achieving your objectives and coordinating the various activities. These are the important objectives of the budgetary control. And what are the requisites? What are the essential elements required for the budgetary control? A good budgetary control must be objective oriented. It's not to be subjective and must be objective oriented. It must be specific objectives, must be focusing on the specific objective. So objectivity, that's an objective, so requisite for effective budgetary control. There's a budget manual. It's very important element is the budget manual. The manual regarding the expense and the expense statements, incomes. There's a budget manual is very essential for the good budgetary control. And effective management always prepare the budget manual for their operations. And third one is budget committee. The proper committee is appointed for measuring the actual performance and find out the variance. So there is a budget committee. There is a budget period. The period is very essential. 1 year element, 2 year, 3 years. The period of the element is very essential requisites, means essentiality for the effective budget control. There is a budget period. And another one is the flexibility. That is a very important element is the flexibility. Must be ensure the flexibility that may changes according to situation. And must be ensure the coordinations and the cooperation. The coordinations and cooperations of the workers within your organization. The effective control and effective budgetary control must be ensure the coordination and the cooperation. And our employee participation. One of the most important of the budgetary control is employee participation. Participating the employees in the decision making. So the employee participation is very essential element regarding the budgetary control. And adequate and appropriate accounting techniques and accounting. Because there is a accounting elements comparing the performances, measuring the income and expenditure. So adequate and appropriate accounting tools is essential for the good budgetary control. Another determination of the key factors. So key factors are another important element. You must be determine the key factors for the budgeting control. And the last one is the reporting. The timely reporting is essential. You must be report the deviations and the variance to the management. So the reporting is very essential element of the budgetary control. These are requisites for the budgetary control. There is objective, budget manual, budget committee, the budget period, flexibility, coordination, the cooperation, adequate and appropriate accounting techniques, and determination of the key factors and the reporting. These are the important requisites for the good budgetary control. Now what are the advantages and the limitations? Our budgetary control have a lot of the advantages and the limitation. And discussing the certain advantages and limitations regarding the budgetary control. The first important objective of the budgetary control must be goal oriented, defining the goal, policies and the enterprises. So there must be goal oriented, it must be objective oriented. Must be defined the goal, policies. And second, budgetary control fixing the target. A good budgetary control is always fixing the target fixing. That means essentiality is very important element. The fixing target time to time. There's another important word is the budgetary control is always fix the target. And third one, it is secure the better coordination between the various departments. Coordinating the various department activity can be easily incorporated a lot of changes. That's one of the important elements is secure the coordination among the various departments. Securing the various activity and also coordinating the cooperations between the members. And another one is in the case of the performance below expectation, the budgetary control help the management find up the responsibility. That means take the corrective action. Suppose there is a variance, the budgetary control techniques always take corrective action. That is the responsibility of the management. That's one of the important benefits. That's the corrective actions that are available. The last one, reduce the cost of the production and eliminating the wasteful expenditure. The budgetary control always reducing the cost of production and eliminating the wasteful expenditure. Okay, these are the benefits of the budgetary control. What are the limitations? One of the important limitations is very difficult to prepare the budget accurately. It's not possible to prepare the accurate budget for the future. That's the first important limitation. It's really difficult to prepare the budget accurately. And second one, a budget involves heavy expenditure which small business organization cannot be afforded. That's the expensive process. Therefore, the small organization can't adopt or cannot afford the concept of the budget control. It's a costly devices. And budget control is already the management tool. It cannot be replaced the management decision making because it is not substitute for the management. So only the management tool. Budget control is also it cannot be replaced the management, the decision making. That is another drawback of the other budgetary control. These are the advantages and the benefits regarding the budgetary control. This first technique, that's a budgetary control. It's one of the important technique used for the cost controlling technique point of view as a cost controlling techniques. And the second one is a cost control. This is one of the important technique used in the management. It's a cost control. What's a cost control? The cost control means it's the process of identifying, reducing the business expenses to increase the profit and start with the budget process. It's a process of reducing the cost and increasing the profit. The cost control is a practice for reducing the cost or expenses and increasing the profit. A business owner compare the actual financial result with the budget expectation and always try to reduce the cost of operations. A good organizations always reduce the cost. Actual cost is higher than planned. The management has the information, need to take action. So try to reduce the cost. Suppose if the actual cost is higher than planned, the management take the action. Cost control is a technique is used for reducing the cost and increasing the profit. This is another important technique is a cost control. And third one is cost accounting. Cost control as an accounting point of view must be used certain technique that's known as a cost accounting. The cost accounting that means fixing the means fixed cost, variable cost, identify the different categories of the cost, direct material cost, direct labor cost, direct expenses, overhead cost, all can be identified with the help of the cost accounting. The cost accounting used by the company is an internal management system to identify all variables and fixed cost with the production process. That means to identify all the variables and the fixed cost. The lot of the variable cost and the fixed cost with an organization. The cost accounting is always useful to identify the variable cost and fixed cost relating with your operation. To individual record can be compared and take the corrective action and to future decision. That's one of the important elements of the cost accounting. It's also useful for the all the elements regarding the fixed and the variable cost. The third one is the cost accounting. This is a cost control. Second one, cost control. Third one is the cost accounting. And another one is a break-even analysis. Now, what is the break-even point? The point is representing there is a no profit and no loss. Suppose this is a profit, there is no profit, there is a total revenue and total cost. This is a total revenue and this is a total cost. And here there is a profit, that revenues greater than your cost, and here the loss is the cost is greater than your revenue. And this is a point, there is a break-even point, there is a no profit and no loss. So break-even analysis is a tool used for analyzing the break-even point. There is no profit and no loss. Suppose right side is always profit and left hand side is always representing the loss. Okay, and here the break-even analysis is a financial tool which helps the company determine the new service of the product will be profitable. How, in other words, it's a financial calculation regarding the profit and loss can be identified which is affordable to them. It is cost oriented or profit oriented. Suppose it's a is the right side is representing the profit and left hand side is representing the loss. So break-even analysis is a situation where the organization is neither making money nor losing money. So or try to make a break-even, no profit and no loss. So must be ensure the break-even, and your revenue is increasing, your the cost is naturally is a profit. Otherwise there is a loss. But the all cost had been covered. So this analysis given the clear picture regarding your the revenue and the cost, and also identify the profit and loss area. That's one of the important element is the break-even analysis. And another one is the standard costing. The one of the important tool regarding the cost controlling, that's a standard costing. A standard costing means it is used to comparing the standard cost revenue with the actual result. There is a tool, there is a comparing the standard cost and the revenues with the actual result. To arrive the variance along with these courses to inform the management about the deviation. So this is standard costing that identify the cost and the revenue, comparing the standard cost and the revenue with the actual result. And there are a lot of the elements. Standard cost is the direct material, direct labor, overhead, all of the important elements regarding the standard cost. So standard costing is very important tool used to comparing the standard cost and the revenue with the actual result. Okay, that is another important tool is a standard costing. And the one is a break-even. Break-even means there is no profit and no loss. This point is known as a break-even. So the right side is the revenue is increasing, the cost is the profit. Left hand side the cost is increasing, the profit. Cost is greater than the profit, there is a loss. So the break-even, there is no profit and no loss area, that is a break-even. And the standard costing, the comparing the standard cost revenue with the actual result. So another important tool is a standard costing. And another one is a comparative finance statement. An organization point to the preparing the finance statement, that means the balance sheet, income statement, that is a profit and loss account, all the important statement. A comparative finance statement is very useful device to comparing the previous performance with the current performance. Suppose a profit and loss account of the current year and profit and loss account of the previous year. You can be comparing the profit is increased, net profit is increased or not, the gross profit are increasing or not. You can be compared with help of the financial statement. These types of statement is known as the comparative financial statements. Normally you can compare the balance sheet of two periods, income and income, that is in profit and loss account of the 2 years. You can be easily compared. So it's like a shown the comparative form, so as to give an idea of the financial position, 2 or more period. And statement is prepared in a comparative form will be covered the comparative statement. It's a very important element. Is you can compare the balance sheet and you can compare the profit and loss account for the different period to take the decision whether the company is going on loss or profit can be identified with help of the comparative financial statement. So it's a very important element. There is a comparative financial statement. Okay, another one, there is a financial ratio. There are the financial ratio. The ratio means it's a relationship between the two variables. One variable expressed in terms of another variable. Now organization point of the lot of the ratios. That means liquidity ratio, solvency ratio, activity ratio, profitability ratio, turnover ratio, all the different types of ratio used for the analysis. The ratio analysis always helpful to identify the leverage position. That means liquidity position, activity position, turnover, profitability position. All can be found out with help of the ratio analysis. Liquidity position, liquid ratio, quick ratio, activity ratio, stock ratio, turnover ratio. You can identify the different ratios for getting the benefit for the benefit of the organization. The ratio is a quantitative method of gaining insight into a company liquidity, operational efficiency and profitability. So this analysis is very useful for designing the good performance of the company or the organization. So these are different types of the financial ratio: liquidity, solvency, activity and the profitability. Okay, this is one of two important tools. One is a comparative finance statement, that comparing the balance sheet and comparing the income statement. And financial ratios find the role of the ratio, that means liquidity ratio, solvency ratio, activity, profitability. These are the important ratios are used for the performance. Okay, and these are the important elements relating with the control technique. One is a comparative finance statement, another one is a financial ratio analysis, and another one is a management audit. What is audit? Audit means the checking, the counter checking of your activity. The management audit is a modern technique used by the management to check the authenticity in your transaction. Check the all transaction going on well can be checked through your the management audit. It's a valuable to use to determine the efficiency, function accomplishment and achievement of the company. The primary object of the management audit is to identify errors in the management activity, find out the frauds, errors. Suppose there's a chance for the errors in the management activity. It can be identified with the help of the management audit. A management audit is like a independent and systematic analysis and evaluation of the company overall performance. It can be used management audit to identify the activities and identify the errors, mistakes, fraud related with the management transaction. So in modern days the organizations are conducting the management audit. So very important tools are helping to identify the errors and the frauds relating with the management. It's like an internal auditing technique sometimes. Okay, and another one is one of the most modern technique is a PERT. PERT representing the program evaluation review technique. This technique is mainly for scheduling and project work. System help the proper scheduling and coordination all activity throughout a project. This is an example regarding the PERT. It's a diagram. It shows that the PERT can be find out the optimum time, maximum time with help of the PERT. That means it is a system that helps a proper scheduling and coordination of your project. In organization, there is a lot of the project work. The PERT is used to identify the time is taken to finish particular active task or activity. With help of the PERT, you can easily identify the time is to take to finish particular task or activity. It's very important element. എത്ര സമയം കൊണ്ട് ഒരു ആക്ടിവിറ്റി കംപ്ലീറ്റ് ചെയ്യാൻ സാധിക്കും? It can be easily identified with help of the PERT system that helps in proper scheduling and coordination of all tasks throughout a project. This concept is developed in 1950. The project evaluation review techniques developed by U.S. Navy managed the submarine missile program. There's introduced by the U.S. Navy. U.S. Navy the first time they reduced how much time is taken for the missile program for the special project office. So in a modern scenario, a lot of the organizations are using this activity and let's identify the time is taken to finish a particular task or activity. That is known as the PERT. A PERT is mainly is a tool to identify the time is to take to finish the particular task or activity. Okay, that is one of the important techniques. A PERT. This is a management audit, and there is a PERT. Another one is the critical path method. This is very important. This is very relating with the PERT. The critical path method is a technique is used in a project. The critical path means longest distance between the starting time to finishing time. So listen, this reddish line shows that is the longest time. This longest time is required to complete a project. The CPM is a very important tool used to identify the longest distance between the start ending time and the finishing time, including all tasks in the duration. So the term is known as the critical path method. The critical path is a project modeling technique. It's mainly used for the project modeling technique that used by the project manager to find out the important deadlines and deliver the project on time with the maximum time is related with the project. And it's very useful devices by the project manager to find the important deadlines and deliver the project on time. This method is known as the critical path method, and it's a find out the important deadlines and deliver the project on time. You can use a CPM, that's the critical path method. In a project, the critical path is the longest distance between start and the finish, including all tasks of your duration. Okay, the term is known as the critical path method. Okay, and another one is information control. One of the modern devices that is information control. The information system control are methods, devices that attempt to accuracy, validity, and proprietary of the information system. This is a MIS. There is a management information system. The information control is required to ensure the flow of the right information, right time, right person. In organization, there is a lot of the information. You must be communicating the information at the right time to the right person. In order to ensure this information movement, you can use information control. And the information management must be focusing on the role, the responsibility of the information, enabling the technology, auditing control, or other part of the information control. You can pass the right information to the right person at the right time. The information system control are the method and devices that attempt to ensure the accuracy, validity, and proprietary of the information system. It's a monitor, maintain the quality and security of your input. The tab is known as the information control. That's another important tool used for the controlling is the information control. So right information to the right person at the right time. That is the information control. You can able to ensure the right information. That's one of the important tools is the information control. And the last one is the quality control. What is the quality control? This is a design process need to backed by the appropriate process design support by the suitable technology. The quality control is basically statistical techniques. QC is a part of the quality. QC is a representation of the quality control techniques. It's mainly related with the statistical technical tool. It's a suitable technology which confirm requirement of the customers. The quality control ensure the defect and errors are prevented and finally remove the process of the product. You can easily identify your errors with help of the quality control. The quality of the product or service is very important element. Suppose you're delivering a product, the quality is very essential. How can I ensure the quality? With help of the quality control, you can ensure the quality of the particular product. The quality product and service ensure if the proper designing process is followed. How can I ensure the quality? With help of the quality control technique can be ensure the quality. And these are two important methods used for the quality control. One is inspection, another one is statistical quality control. Inspection means the checking of the product to see that the product has standard is one. How to measure the quality of the product? You can inspect. You can inspect the checking of product to see that all the product has standardized one. That's the inspection. It's a very important element is the inspection. The quality control technique can be possible with help of the inspection. And another one is statistical quality control. You can use a lot of statistical tools like the probability and the decision making theories for examining the sample. This is statistical control. It's a procedure of the control, the quality of the product, application of theory of the probability. You can apply the theory of the probability theory and can take the right decision. The statistical quality control is one of the important tool used for the decision making, and it's a controlling point. And these are two techniques are used for the quality control. Inspection, you can check how you can see the product are standardized one. Check the product to see the product are standardized one. That's the inspection. Statistical quality control, it's like one of the important tools. That means we are using the probability techniques, and these are two important techniques used for the quality control. That means ensuring a quality of certain product. That's the advantage of the quality control. Okay, listen, these are important methods. There's statistical sampling, quality control, inspection, and also flow chart and scatter diagram, and a lot of the important related to the quality tools. Like you can use a flow chart, you can use scatter diagrams, and check sheet control chart. A lot of the tools can be relating with the quality control. So these are the important tools relating with the quality control. You can use any tool for your convenience. So quality control, the objective is to ensure the quality of the particular product. The quality of the product service is ensured with help of the quality control. Okay, let me conclude. And this lecture is pure relating with the important quality control techniques. Controlling techniques. That means the control or important controlling techniques. And we're starting with the controlling. What is the controlling? The controlling is like a process of measuring your actual performance and comparing with the standard and find out the deviation and take the corrective action. The process is known as the controlling. And this is the important controlling technique: the budgetary control, cost accounting, break-even analysis, and like that quality control techniques. First one is a budgetary control. That means the budget is prepared for comparing the actual performance or the and find out the variance. An actual with the standard and find out the variance. That's the budgetary control. And these are the objectives of the budgetary control. Requisites of the budgetary control, advantages and the limitation. There's cost control, reducing the cost. Cost accounting, identify the all variable related to the fixed and the variable cost. Break-even analysis to find out the break-even part. There's no profit, no loss. A standard cost means comparing the standard cost and revenue with the actual result. And comparative finance statement, comparing the balance sheet and the income statement. And financial ratios mainly for identify the ratio relative to the organization, like the liquidity, solvency, activity, and the profitability. And these are the important ratios relative with your the financial statement point of view. One is your the comparative finance statement, another one is a financial ratio analysis. And there is a management audit. What's the management audit? The management audit means it's a modern devices to measure the errors in your the management activity. That is the management audit. There is a PERT, program evaluation technique. It's used for the project, and system help the proper scheduling and coordination of the all the tasks. There is a PERT. There is a critical path method. The critical path is another important method. That means to find out the project duration. It's a modeling technique that used by the project manager to find the important deadlines and deliver a project on time. And there is information control. Information control as method, devices, attempt to ensure the accuracy. And there is a quality control. The quality control means ensure the quality of the particular product. So controlling is like a process measuring your the actual performance, comparing with your standard, and take the corrective action. In a modern days, how the management is taking the take the decision with the help of the controlling, and using a lot of the controlling techniques like the modern technique and traditional technique. And modern technique part of the PERT, CPM, and the quality control, all are the modern technique. So as per the manager, a good manager must try to use, a good management must try to use the modern techniques for controlling the activity. The modern controlling technique is very essential for the success of your organization. So you must try to ensure the modern techniques in controlling process. Okay, anyway, thank you so much, and thank you for watching me.